Retail giant Woolworths has tabled its slowest first-quarter sales growth since listing on the Australian share market. A 20% drop in fuel prices has dented its supermarket gains. But Chief Executive Michael Luscombe remains confident for the full year, and he's also confident the company's expansion into the hardware market won't be derailed by competition concerns. Leslie Coleman reports.
Woolworths is the first of the major retailers to table quarterly sales figures for the new financial year. Turnover is up 4.2% to $13.3 billion.
It was a really good, solid quarter, good start to the year for Woolworths, but more importantly, I think it was a really good quarter for Australian and New Zealand families that the prices in the basics of life food are starting to come down.
At a divisional level, the Australian food and liquor business was up 7.8%, with shoppers spending more to take advantage of Woolworths' loyalty program, now being linked with Qantas's frequent flyers. Big W increased sales by 5.8%. Hotels had modest gains, but the drop in the petrol price saw the value of sales fall 16.4%. The market had been looking for a total sales growth of 5%.
Q1 sales were certainly good, but they weren't great. The market had been expecting a really striking number. We saw yesterday the share price run about 2.5% as investors clamoured to get on board. But when it failed to meet expectations on the headline result, we did see the stock trade off this morning.
Chief Executive Michael Luscombe has reiterated his full-year sales forecast of high single-digit growth. However, he was quick to point out the economy is still fragile.
Let's get through the first anniversary of the direct stimulus program that we had in December. Let's get through, one or two interest rate rises, depending on what the Reserve Bank decides to do. And let's reassess the situation come January.
But the Woolworths boss is unlikely to reassess the retailer's plans to break into the hardware market, despite a review by the competition watchdog. Late last week, the ACCC raised concerns over Woolworths' joint venture plans with Lowe's to take over hardware supplier Danks. But the Retailers Association is concerned.
And I indeed hope that the ACCC will see this for what it is, which is a slap in the face for competition, certainly a narrowing and constriction of the hardware market in Australia, and something that at the end of the day will be bad for consumers and indeed push up prices in the medium to long term.
Grant Crowell has been involved in the independent hardware business for more than 15 years. He's worried the Woolworths purchase of Danks will cut his supply options in half.
We think that lessens our ability to get better pricing because of the reduction of competition from our suppliers. We're quite happy for Woolies to compete in our market, as we think we offer a good offering, and a lot of independent hardware store owners do. And I think the customers out there are looking for a lot better service than what they achieve from either Bunnings or they will from a Woolies type branded store.
Michael Luscombe insists the company is fully cooperating with the ACCC's investigation. But for hardware operators like Grant Crowell, it will take more than Woolworths cooperation to convince him the planned joint venture won't crush independent outlets.